the credit union. Here we go. The recording is started. So, and Coco, I think we could probably go to the next slide. But this is what we'll be doing in the next 90 minutes. I think it's pretty obvious agenda. But let me say a word about Northside Funders Group. So some of you are aware we've been around for quite a while, about a dozen years, maybe longer. In our current version, we have 9 members. We meet monthly to focus on North Minneapolis. We're all funders that have a particular interest in supporting North Minneapolis. And in particular, what Northside Funders Group centers around are economic development ideas and opportunities and education ideas and opportunities. So we make grants as a group in those 2 spaces. Sometimes we grant from our modest pool of investment money, and sometimes we make grants together in aligned funding. Recently, I'll just say some of the grants that Northside Funders Group has made in North Minneapolis have supported pre-development costs on several Black-owned property development projects, as well as supporting parent participatory evaluation at Minneapolis Public Schools. If anybody on the call is not a member of Northside Funders Group, you are certainly welcome to attend our monthly meetings. They're a great way to learn what's happening on the north side and to get really down to some, I mean, literally some block level insights on what's happening in terms of economic development, property development, and so on. So we meet the second Thursday of every month. Our meeting is tomorrow, but we're happy to invite folks on the call to future meetings if you want to join us. So one thing that Northside Funders Group does to bring value to its members and to the Twin Cities funding community is to host these learning events, ways for funders to go deep on issues that are kind of top level issues on the north side. We recently did one around the Blue Line, the light rail construction plan, which will take light rail right through the heart of North Minneapolis. And we're really so pleased to have all of you here with us today for this update on a 5-year-old dream to create a credit union on the north side. So as I'm going to say a little bit about the origins of Village, but as we get into this, I guess just a couple of housekeeping things. Obviously, please mute yourself. If you're comfortable keeping your camera on, that would be great. That really creates a more personal interaction here. And we'll have a chance to engage with each other when we get into the Q&A time. We encourage folks to ask questions on camera. You can also drop questions in the chat as we go along, and Coco will moderate that for us when we get to that part of the agenda. So yeah, here, let's get into it about Village. 5 years ago, a group of African-American community activists gathered together in the aftermath of Philando Castile's murder by a St. Anthony police officer. And that group was trying to find some way to create something out of that moment of grief and rage. And their dream, the dream that they arrived at was to create a credit union in North Minneapolis. And that's when the concept of Village Financial was born. But little did those individuals know how audacious their dream was. Years of work lay ahead for the Association for Black Economic Power. As I said, the nonprofit that has been founded to stand up a credit union on the north side. It is not a small undertaking to do this. It's much more difficult than launching a nonprofit. The regulatory and fundraising bars are very high. as they should be, because this is a financial institution that people are entrusting with their money. But there were many of us on this call who heard that dream and responded. And I just want to, at the beginning, thank the funders, the foundations who supported ABEP in its early years. Your support has allowed this organization to endure this challenging road to launching a credit union for nearly 5 years. And those funders that I specifically want to mention are the Jan Rose Phillips Family Foundation, where I worked and continue to serve, the McKnight Foundation, the Polite Foundation, the Minneapolis Foundation. Northside Funders Group actually was an early funder of this dream. And also the city of Minneapolis was a very strong funder of ABEP's dream. So as I said, your support has allowed ABEP to continue to make progress towards this goal. As many of us know, unfortunately, this dream was deferred by the sudden and damaging departure of ABEP's founding director. But as you'll learn very shortly, ABEP has a new executive director, and her steady leadership is carrying this idea forward, and she is wholeheartedly determined to see a credit union open in North Minneapolis. I hope you're excited as I am to learn more about that progress. But before I turn it over to the ABEP team, I also just want to say one last thing. You know, the conditions, the environmental conditions that created the need for this kind of financial institution back in 2016 are still with us. We still see predatory lending throughout North Minneapolis. As you can see on this slide, many Northsiders remain or underbanked, and the black-white wealth gap has not gotten smaller. I think it's gotten larger. So, you know, one community-owned credit union is not going to solve these problems, but I think the thing that we all responded to back in 2016, 2017 was that it's a new solution. It's not the same old solutions that we've been funding forever. It's a new kind of solution that can, over time, really start to chip away at these entrenched problems. So I hope we're all excited to learn more. With that, I'm going to turn it over to the ABEP team, which consists of Valerie Gaither, who's the chair of the board, Denise Hugini, who is from the African American Credit Union Coalition, and Deborah Hurston, the executive director of ABEP. With that, I'll turn it over to you, ladies.
Okay, thank you. Thank you very much, Joel, for that introduction and laying out the context for what we are engaged in. I would also like to thank the Northside Funders Group for setting up this forum and inviting ABEP to reintroduce ourselves and to update the community of funders on the tremendous progress that we have made especially in the past year, bringing to fruition this Village Financial Credit Union. In addition, I'd like to just take a second to thank all of you who are present this morning. We appreciate your taking your time during this holiday season to hear our story and to learn about what's currently happening and what our current needs are. My name is Valerie Gaither, and I am the chair of the board of the Association for Black Economic Power. I have lived in North Minneapolis for 20 years, and I had a daughter who graduated from the former Summa Tech program in North High School. And I am very proud to announce today that I have a granddaughter who is currently buying a home, her first home in North Minneapolis. So I have a strong personal interest and investment in the economic vitality and well-being of North Minneapolis. So I come to this with a very strong personal interest. But beyond that, as an academic and having spent 30 plus years in higher education, studying, applying, and teaching social behavioral science for family uplift and community development, I am very intimately aware of and understand the value of the work that we have embarked upon. And I am committed, as well as the rest of the board and our director and other people, for the long haul, to this particular endeavor. We understand that the quality of life for families and the community is founded on financial health, and that financial health just enables the community to be a more livable space for everybody. So part of fulfilling that commitment, though, involved hiring our current executive director that we have, Deborah Hurston. She has become the face and the voice, as Joel said, of our organization, and you'll be hearing more from her not only later, but in the future. She comes to us with a very strong association background. And as I said, you'll be hearing from her soon. She'll be filling you in on the major milestones that we have achieved and on the current status of our initiative. My task, though, right now is to provide a brief chronology of what has transpired with the initiative over the past 5 years. Joel did an excellent job of sharing with you, and probably most of you do know the genesis of this initiative. But one thing that I'd like to add is that the people came together very specifically to say that they wanted to cultivate economic power. Economic power is both a form of protest because of what was going on at the time, but also as a form of protection of Black lives. And I don't think that that should be lost. We are called Black economic power for a reason. They prioritized developing or establishing a Black-led credit union in North Minneapolis. And as Joel said, it was an audacious idea. Actually, it was a bold, very bold idea, one that captured the imagination, the hearts, and of course, the support of many community members, not just those in Minneapolis, but beyond as well. So, but as Joel also said, this is an arduous venture. And I don't think that people probably at the beginning who had the vision, which was a fantastic vision, even could imagine what it was going to take to fulfill that vision. So, but they did begin, and I'm going to look at years 2017 and 2018. I like to refer to them as the foundational years, basically. The nonprofit organization ABEP was formed with a very broad vision and mission to disrupt the community wealth extractors. That's a big way of talking about the payday lenders, but there's other wealth extraction that goes on as well, and to build community generators in order to in other words, in order to develop the kinds of things that will help the community build its wealth. So there were so those are the two arms, if you will, of the vision and the mission. But ABEP was principally formed to shepherd and to sponsor the creation of the Black-led credit union. So it was registered with the state, a governing board was named, staff was hired to do the research on credit union best practices and to take the, to actually begin the initial preparations for a credit union charter application. In 2018, with the generous support, and this is somewhat of a repeat of what Joel said, but it needs to be mentioned that with the generous support investment of many of you, and particularly Jay and Rose Phillips Foundation, ABEP was able to, and is able to still today to continue to function. The monies that were secured at that time were underwriting our initial, what we refer to as our sponsorship costs. These monies have been held in reserve, and they are in part the monies that allow us to continue to do this work to this day. So that takes us to 2019 and 2020. I like to refer to these years as the challenge and the incentive years, actually. ABEP was challenged like many organizations and institutions during this period. We were challenged by a change in organizational leadership. we were challenged by the worldwide pandemic and the shutdown that occurred as a result of that. We were challenged by the local unrest after George Floyd's murder. And as a result of those challenges, those multiple challenges, some of the steady progress that was being made was halted. But it gave us an incentive, if you will, and that's why I call it incentive years. These circumstances gave us an incentive to press forward. I think with more with more energy. The pressing economic needs that were highlighted as a result of these circumstances, and in some cases exacerbated, incentivized us to say, okay, we're going to create a new board and we're going to continue the progress that had been made. So by mid 2020, a new board was installed, of which I became the chair. We resuscitated the organization, and by the end of 2020, we had hired a new executive director. And so we were ready for 2021 to resume the heavy lifting and the delivery on the promise and the quest for the Village Credit Union. The ED has become, as I said earlier, the face and the voice of our work. And we are pleased and very excited about the progress we have made with the organizational structure we have built thus far. In addition to the board, we have a board currently of 3 members, and we are expanding that to probably 5, perhaps 7 in the next couple months. We have Deborah as our primary leadership, and we have a small staff that's supporting Deborah. But we also have seated a community credit union steering committee, which represents a cross-section of the members of North Minneapolis. They provide for us on a regular basis the needed community perspective on all aspects of the credit union work. As Deborah is the face and the voice, our steering committee regard as our ears and our eyes. So we have also assembled a technical support team and a credit union advisory group to ensure we successfully navigate this incredibly complex endeavor. So I will turn the floor over now to Deborah so she can go more in detail about these relationships, the work being done, and the stage that we are now in the development of the credit union.
Thank you, Valerie. First, I would like to also thank you all for your support and interest in the efforts of ABAP and in bringing Village to life. Just a little bit about my background before I introduce the members of the team. I grew up on the south side of Chicago in a single parent family, similar to a neighborhood that you might see in North Minneapolis. I am extremely familiar with wealth extraction. I have a strong history in association management. And when this opportunity came on, developed with ABAP, I felt it was my chance to use my skills to support a community similar to the one that I grew up in. I can identify with their journey with regard to the environment in which they live in. So when I came on board on December 15th of last year, I took a look at where we were, and I was looking for support. I found out that what ABAP was trying to do had not been done in Minnesota, I believe, in 17 years. And so there was no one around who had done it before that you could lean on. So I contacted the African American Credit Union Coalition. They were very aware of ABAP. They were very aware of ABAP's journey, but they had not been reached out to by the prior team. And I did that. I reached out to them. I explained to them where ABAP was in its journey. And they leaned in and sent us someone we'll meet later, Denise Hugini. Denise is the national partnership director for the association, for the African American Credit Union Coalition. And they have an international and national reach. It's made up of minority and majority credit unions led by a lady by the name of Renee Sadie White, and they have been amazing. They've reached in and introduced us to the Minnesota Credit Union Network. Ariba Advisors is a technology, I just call it technology guru for credit unions. They have walked with us through our entire journey with regard to our digital footprint. And from a prior experience, I'm leaning on a grant consultant by the name of Patrice Ateta. And so I have we've surrounded ABAP with critical support to help us do this lift. And I absolutely would be remiss if I didn't, I want to lean in and talk about the Minnesota Credit Union Network a little more in depth. The Minnesota Credit Union Network has, through their involvement with us, they've created a credit union advisory team for us that is composed of every single expert issue with regard to the charter. And so if I am looking at a core processor, we've got people on that team who've done that. If I need, and we do need to put together our performa, actually 90% of it's done. They've got experts who have done this. And so this journey, this boulder isn't something that ABAP has to take alone. The Minnesota Credit Union Network has leaned in hard, and they are taking this journey with us to the point, and you'll hear more about this later, where they are also helping us build a strong financial foundation for this initiative. And I've also asked Ben Herring, who's over the community engagement with the network, to come into this meeting in the event that there are any questions for them later. So now what we're doing is we're looking at milestones. The number one question I get is, when is it going to open? That has to be the number one question. And it's a fluid answer. The date's fluid because, and I'll explain why. The initial state application, we're anticipating that we can deliver that of the first quarter of 22. The NCUA application, and this is the fluid part, it could take 6 months to a year. And that right there is where all the elasticity is in the timeline. The credit union CEO, we're looking at hiring in the first quarter of 22. We have a number of close to 40 potential applicants who are interested in helping spearhead this initiative from the CEO seat. The technology setup, we're looking at that in the fourth quarter of 22. You know, and I kind of glossed over what Ariba Technologies assisted us in, but I need to just step back a little bit. That core processor that I mentioned, that is the heart of the credit union operation. And so when the Association for the African American Credit Union Association connected us with Ariba, what they were doing was helping us. They gave us someone to guide us through every single step of selecting the heart of a credit union operation. And so we have seen the large, the small, and the in-between in terms of core processors. And the Credit Union Steering Committee has reviewed the final two and will eventually make a decision on which one But all of that was possible because we had collaborators, we had people leaning in to help educate us and guide us in our selection process. And that's a huge deal. I can say it in a few words, but I can't really explain how big of a process that was. So we're looking at a soft launch, and by soft launch, I mean a online presence by December of 22. Next. So some of the milestones, the key milestones that we're looking at. Right now, we have our eye on 7 locations that the credit union is looking at to house the credit union. And we think we'll make that final selection in 22. We're looking at doing the build out in the first quarter of 23 with the grand opening for the end of 23. Before Denise gets started, I just like to say she's going to go over our key funding requirements near 2 lanes. The bottom lane, for instance, is deposits. The charter application requires us to be able to demonstrate that people are interested in moving their resources to the credit union. And so there are pledges and some of you may have actually pledged in the past. So there are pledges that we'll need. The top level represents the actual working capital that we'll need. And so Denise, at this point, I'm gonna ask her to go over those with you.
Thank you so much, Deborah. And I represent the African American Credit Union Coalition. We're so pleased to be involved in this project, and we're so pleased with the progress that ABEP has made in the last year and a half. We're also want to acknowledge the generous support of the philanthropic community that has enabled ABEP to do this work. They're well-resourced to continue to do this work, and they're very committed. But without your help, they would not be here today. So thank you to all the foundations and corporations that have supported ABEP, as well as individual donors. We want to acknowledge that work that's been done. Right now, as Deborah pointed out, we've looked at what is needed to open the doors of the credit union and then to sustain it. So the pre-launch working capital that we need to get in place in terms of pledges and contributions is about $1.8 million. That would sustain us through the charter application, the technology deployment, all the way up to licensing. The time period to get the license probably is a 6-month period for that, 3 to 6 months for the state license, but it's unknown for the federal NCUA approval for the insurance. And in the state of Minnesota, you're not allowed to have private deposit insurance. We need NCUA insurance. But that 1.8 million would allow us to submit the charter application to the state, showing that we have the resources in place, and to begin to hire and train staff, put the technology in place. The post-launch working capital is essential because we need to stabilize the credit union. As a de novo, your incomes will not be able to cover expenses. So there's a post-launch working capital budget that will stabilize by year 3. We have a pro forma that was done by one of the leading technical assistance organizations that was referred to us by the Minnesota Credit Union Network. Additionally, even though we can launch as a digital credit union, there is a need for the headquarters build out and the location to be determined. The credit union steering committee is evaluating several sites. Depending on the sites and whether or not there's a vault in place and a drive-through, the build out low cost will probably be about 1.5 million for furniture, fixtures, equipments, tenant improvements. Currently, we don't have a plan to purchase a building, but to renovate a building and go into lease space. The total ask is really $6 million. When you look at those top 3 categories combined, that's the startup budget we've identified. And additionally, as Deborah described, there's probably another 5 million or more in consumer deposits or pledges. We have to show that the institution has the support of the community, that the community is going to do banking there, and that we have to show the viability of the organization. Over time, as the organization gets an MDI, low income designation, CDFI designation, additional lending capital will be available through CRA sources, CRA intermediaries, and even directly from the Treasury. So these are the types of things that our technical assistance providers are helping us with, to come up with a good budget, to come up with a good pro forma, and then to actually start to conduct the campaigns for the pre-launch capital, which is our reason for being here today, the post-launch capital, the capital campaign, sort of the build out of the headquarters, and then all of these pledges. We do want to emphasize that many donors will support us in two ways. Some will give us contributions, and then they will also, once we open, make deposits, transformative deposits, some typically up to the $250,000 insurance limit. So on the next page, this is an example of the type of support that we're receiving from the credit union community at a local level. This month, the Credit Union Network announced a $1 million special purpose fund. And these fund will receive contributions and pledges from credit unions in the state, credit union foundations, and credit union employees. I believe there's already been a pledge from Affinity Plus Credit Union, who was one of the major supporters of the previous, the original launch team. They want to stay involved. They still believe in the mission. And so they've made the first pledge. But I think there have been other pledges that are in the pipeline from individual CEOs, credit union CEOs, and other major credit unions. And we would hope that they are successful in meeting their target of $1 million in pledges by December 31st, but that this fund will stay open through to 2022 and continue to receive pledges. So this has been an important campaign. They're also taking the initiative not only to get the contributions, they're going to go back and ask for deposits as well. So they've made this job a little easier for us by working at the network level, hosting events where Deborah can make presentations, inviting her to the annual conference. She spoke yesterday at another CEO meeting, and I'm just overwhelmed with what Ben is doing. Ben, I call him St. Paul. He's an evangelist for this project, and he also lives in the neighborhood. So thank you very much, Ben, for everything that you're doing on behalf of this project. I'd like to turn it back over to Deborah.
Oh, thank you, Denise. When we take a look at the critical success factors for this initiative, of course, it's our initial fundraising requirements, the deposits, and the secondary capital. The CEO with credit union experience would be ideal. If that isn't possible from the pool of candidates, we have a training protocol to assure that that person gets off on a successful track. A board stewardship, a marketing and outreach plan that complements the products and services that we're offering. And of course, as I mentioned before, I can't seem to get away from that digital footprint. It is the core, the heart of the success of the credit union. So at this point on the agenda, I believe we're going to open it up to questions. We may have had some questions come in through the chat room. I like to do questions as do it as a conversation. And so if you have any questions for us, please don't hesitate to open up your mic and let's just have a conversation. Don't all speak at once.
Hi, Deborah. This is Joanne with the Minneapolis Foundation. Just a couple of questions. One, we've had this conversation before and asking how things are progressing with the city. They initially had made a very major commitment of operating support for Village Trust in the past. And if that still looks like that's likely. And secondly,
so Joanne, for me, you broke up just a little bit. Did you ask if the city of Minneapolis is still in the pipeline for support?
Correct.
The answer is yes, because we haven't gotten a no. They still have our proposal. Our last conversation with them was that they were impressed with the proposal, and it's no secret that that ask was $6 million. We understand that we did not make it in the first round, but we're still on the table.
And then my second question had to do with the commitments for deposits. I know a number of the funders had signed those commitments in the past, but my assumption is that those are no longer binding, but those are things that you would need to reintroduce again to those funders. And then,
Exactly.
do I understand that beyond the promise for deposits, you actually want to receive deposits, and the Minnesota Credit Union is going to take those deposits in the interim?
No.
Okay.
So the credit union doesn't exist as a legal entity. So we cannot take deposits. The village cannot take deposits. The Minnesota Credit Union Network is taking deposits through their own foundation. And so any deposits to the village, they could go to ABAB in a restricted account. They could go, if the Minneapolis Foundation established an account, they could go to the Minneapolis Foundation, but they can't go to the village. The deposits can wait until after the state regulators say, yes, this is a legal entity. So, and that we won't know until after the first quarter of next year. And so, but the commitment of deposits, we'll need that before we can submit the application. The commitment of deposits needs to come with us in the form of a letter with the application.
So Joanne, we are taking charitable contributions, not deposits,
Right.
but pledges can be made for charitable contributions. Pledges can be made for bank account deposits as well but we're really focused on the charitable contributions, the grants at this point.
Right.
We are reaffirming though the pledges. Deborah has someone assigned going through all those pledges and soliciting new pledges for member accounts.
Excellent. It looks like we have 2 hands raised. I'm going to call on Joel first, and then Corey, you can go next.
Great, thanks, Coco. Yeah, I can comment on this last piece. That actually I was going to mention a few details just as a bit of history. You know, Philip's name has been mentioned here a few times, and I think those of us who've been around this project for a while know that Phillips was, I think, the first funder, and we are just in the process of finishing out a 3-year $750,000 commitment to Village. So I think we're probably the largest funder to date. Hopefully the city overtakes us. But just some comments based on that history. You know, you can read between the lines of Valerie's chronology of Village to understand that there was pretty much a restart in 2020. I think we can look back at those early years as a place where lessons were learned, and some goodwill was built, but you know, it's a new team, and it's very much more, I can say from having been close to the original work and now learning more about this work, it's a much more kind of industry focused perspective. You know, it's very brass tacks, if I can say it that way. How do we make a credit union work? Who are our friends in the business? How do we tap into those resources as well as the philanthropic resources? Just to Joanne's comment about the pledges, people might be interested to know that in those first couple of years when Village was out there raising pledges for deposits, over 2,000 people pledged to deposit money at Village. And the total of their deposits was over $5 million. So this goal of $5 million of deposits seems very realistic to me. And that certainly included a bunch of institutional pledges, like from Phillips and many of the funders on this call, to open a CD or a savings account or something at Village. But it was thousands of individuals who said they were going to open accounts too. So there's a lot of goodwill for Village to come back to. And then also I wanted to make a point about something Valerie just mentioned. Village has asked the Minneapolis Foundation if we can create a designated fund to hold charitable contributions for Village's operating expenses. And the Minneapolis Foundation is currently considering that request. ABEP is a nonprofit. It can receive funds directly, but we're in discussion about whether it would be advantageous to have a separate holding account, so to speak, here at the Minneapolis Foundation that would provide a highly protected way to make sure that funding got to its intended purpose. So those are my comments. My question back to Deborah and the team is, how are you working now to tell me more about the steering committee and how that's helping you reach out to Northside potential customers?
I'll take that. The steering committee, which is made up of local residents. Let me step back. Because ABAP is leaning on industry experts who may or may not be, and in most cases are not, with the exception of Ben, from North Minneapolis, it's critical that we don't lose the voice of the people that this whole initiative is designed to serve. And so the steering committee gets to view every single element of what we're doing. So the charter application has a number of different ingredients and different parts to it. The steering committee's voice, the community's voice, is heard on every decision we make, from the field of membership to the products and services that we serve, to what the board makeup would be like, the CEO. And now what the steering committee is planning on doing is organizing outreach programs, initiatives in the community, so at selected community hubs, so that ABAP can have a presence and reignite the positive energy that once was there for this initiative. That's going to be led by the steering committee. So did that answer your question, Joe?
Yeah, that's helpful.
Mm-hmm.
Excellent. Corey, would you like to lift up your question?
Sure. First of all, I just want to say this has been an outstanding presentation. Thank you so much for having it and for inviting us in. It seemed like the last slide that you had that kind of said, critical needs seemed like a really nice list for opportunities for skills-based volunteerism. I'm just wondering kind of maybe what your one or two top things are right now for those skills-based volunteerism opportunities to kind of get you over the finish line to the point where you're up and operational. I don't know if you even have that, if there's like a top need, but if there is, we'd love to hear about it.
I'm going to ask any of my my colleagues to chime in here, but Corey, absolutely, a lot hinges on the organization being able to secure operating capital. That is critical. That 3-year period, what we've done is in the pro forma, we've identified products and services and a fee structure, because even though it's a cooperative credit union, it is also a business. And so in the pro forma, you put together those, the products and services in a potential use level, and you end up with what you think the credit union will make at the end. While the charter requires us to demonstrate a 3-year threshold or a foundation of steady, stable growth. We want to do more than that. We want to show 5. If we go in on a solid capital foundation, that 3-5 year period would be much easier. What I didn't, I mean, the core processor, I keep leaning on that because it's the biggest thing that you can't do without, and it's the most expensive. And so having a strong financial footing is the most important thing. When they sit down, when the regulators sit down to look at the charter, they want to be reassured that in 3 years, they're not looking at liquidating the organization. And that's what keeps me up at night. I need to make sure that we have a strong financial footing to get to not to just open up, but to keep it going and to show a steady growth.
Sure. Can I follow up just with a quick follow-up question? So when you say that, oh, go ahead, sorry.
Yeah, I wanted to just maybe be a little bit more specific about some of those things, because when we are looking for people to volunteer, we really do need people who are going to be ambassadors, if you will. At one point, there was an ambassador program. And what that means is that we have people who are in the community who are assisting us setting up educational programs. We have a community engagement coordinator now who will be working on setting up some educational programs and helping us do some marketing. So we do need bodies because we don't have an extensive staff to do that kind of work. But we do have people who are going to initiate it and develop it, but we need bodies to help us do that. And I think, the word ambassador is kind of a nice one. I like that, as opposed to just a volunteer, but a volunteer ambassador. But in addition to that, these ambassadors or these volunteers would also help us to solicit new pledges and to review the old pledges, because that's a major task. Like Joel said, there were over 2,000, and we don't have the staffing capacity. We do have someone who's helping us work on that, but we don't have the staffing capacity, to really go through. And that could be a very major way of reigniting, as Deborah said, reigniting the energy by reconnecting with a lot of those people. So that's one thing. And then a third thing is that we are developing the organization, we're developing the board of ABEP. And Deborah mentioned the hiring of a CEO, but also we will have to install a credit union board. The ABEP board would not be the credit union board. So we could really use people's insights, references on good people for these positions. As we've been recruiting, I've been finding out that people are nominating folks. So if you know of people that would be ideal and good for these positions, that's another way that people can, as volunteers, if you will, contribute to our current efforts. Does that
Thank you,
help?
Valerie. I completely forgot to mention that, but that is a critical need, more capacity.
And Corey, you asked about other types of resources. We'll be looking for marketing, external affairs, PR types of consultants. Also, I think the whole financial education area will be partnering with credit unions, existing credit unions, because the staff will be existing credit unions and financial institutions, because the staff will be somewhat limited at a very small credit union initially. And so there is more of a collective impact model for financial institutions, I think, to come together and use some of their outreach resources to support this effort.
Great, thank you so much. And I just have one quick follow-up question. This is awesome to have this list. But Deborah, going back to your explanation for the 3 to 5 years of that financial stability, would it help as you're taking pledges to have multi-year 5-year pledges, or are you talking about growth that's year over year, new donors and contributions?
I think multi-year pledges would be ideal.
Thank you.
Thank you.
There's still time for more questions if you have them.
You know what? I haven't. I'm going to take this opportunity to thank our prior sponsors or financial supporters. Some of you are on the call. Some of you I have met, and some of you I have not. When I came on board, I kept my head down, trying to assess the landscape and get the ball rolling. And I do feel as if I've neglected you, and it certainly wasn't intentional. It was just trying to keep things moving. But I do want to thank you for your prior support. And we could not have done and couldn't be doing what we're doing right now without it.
Joanne, I see you've got your hand raised. Go ahead.
So just a couple thoughts. Deborah, I think we'd love to have you back again after the first quarter to maybe provide some updates to us. And following up on your comment of you're wanting to be able to have more perhaps one-on-ones with individual funders. I would certainly encourage that, but I'd also encourage the individuals that are on this call to make that initial step and contact Deborah as well.
All right, Joel, I see your hand. Go ahead.
I wonder if you guys could talk a little bit about the kinds of products and services that you think Village can offer that will add value for Northsiders, or that will attract on and underbanked individuals.
Yes, and I'm going to ask Denise to chime in on this, but I'm going to start it off. We have identified a whole potpourri of products and services to meet the general public. So our field of membership is Hennepin and Ramsey County. Anyone who lives, works, goes to church, goes to school in that area. A segment, just as Joel mentioned earlier, a segment of that population has been riddled with and caught up in the payday lending cycle. So we have identified products and services to specifically address the needs of the unbanked and underbanked, and to assist people with moving from payday lending to more traditional and stable ways of managing resources and accessing funds. So those products and services, that was a critical component for the steering committee, and it is definitely part of our offerings. And there are a number of different products and services designed specifically to do that.
So Joel, one of my part of my work with African American Credit Union Coalition and working for Deborah is benchmarking these low income payday loan alternatives, things that are considered necessary to bring people into the banking system, to create financial inclusion and avoid predatory lending. So I was actually on a call with the Consumer Financial Protection Bureau yesterday. They asked of us what we were doing in those categories, and we mentioned a credit union owned firm called Q Cash Financial. They'll be making a presentation to Deborah soon, because they not only do the micro lending or facilitate the micro lending that all credit unions do. They'll loan you $50, they'll loan you $250. Obviously, a large bank is not going to make a small loan like that, but that's what people need when they maybe have a flat tire, or they, the kids got to go back to college and they don't have bus fare, they need to make those small loans. What QCash does, and I even referred them to CFPB, is they allow you to do this underwriting automatically. You do it real time, you do it 24/7. So let's say I have a flat tire on a Saturday night and I'm a shift worker and I've got to go to work and the garage and I don't have my credit cards are maxed out. Well, I'm going to go to the payday lender. But with QCash Financial, I can get that $800 or $700 loan immediately, a 60-second underwriting. And so those are the kinds of products and services where the credit unions are partnering with the fintechs to really go in there and intervene. Another example that Deborah has already seen is a product called a take back loan. If I have a $600 car loan, but I'm paying $650 a month, I'm basically prepaying that loan. Then if I end up with an emergency, they actually allow you to go in and take that prepaid back automatically. So you're kind of loaning the money to yourself. And so it gives people a little emergency reserve. They can do that with mortgages, they can do that with vehicle loans. And so there's a lot of things that the credit unions are doing. And obviously we don't have large overdraft fees. Some people have an overdraft fee of $3, and when you restore your account, they refund it to you. So there are a lot of things that we do in the credit union world to make it easy to support financial inclusion. I'm trying to think, are there other examples, Deborah? But we've been benchmarking low-income credit unions. Obviously, many credit unions sit down with people who are in financial distress. They help them restructure, say if it's a car loan, or if they're in a payday loan, they will actually come in and take them out of it. They will help them refinance that, sometimes zero interest, sometimes, cut the interest rate in half. So there are a lot of programs in credit unions to help people fight, these pernicious effects of the payday lenders. And that's one of the issues with North Minneapolis.
One of the things I like too, Denise, is that we will have the ability to adjust or determine what we consider to be trustworthy or credit worthy versus someone else. That will be the credit union can make that decision, not someone far away mandating that we use their formula to determine when you walk in if you are credit worthy. And some people, particularly the unbanked, may need a different formula to determine their credit worthiness than someone else. And so having that flexibility, and that is would be built into the core processor, is critical. You know what, we have some time here, and I promised Ben that he didn't have to speak unless he was called on, but I'm gonna call on him. So Ben Herring, can you release your mic, Ben, is with the Credit Union Network. And I would like for you to hear from him some of the activities that the Credit Union Network has done or is doing to assist ABAP, to assist the village into coming into reality.
Thanks for having me, Deborah, and for allowing me the space to say a few words. Really, really honored, as I mentioned in the chat, to join you all during today's presentation on the advancements of the credit union here. It's been just my pleasure to work with to Deborah and the Association for Black Economic Power. I will say, as a credit union former employee and now as an employee of the Association for all credit unions in Minnesota, this is the project of probably our lifetime, I think. We look at it from a perspective of credit unions being established in the United States. My mic is a little off, it sounds like.
A little bit.
Perpetual problem that you'd think I'd be able to fix here. Hang on one sec. All right, did that do anything at all?
Yeah,
It did.
much
Okay.
better.
All right, wonderful, thanks. So as I was kind of getting into, I'm just gonna just briefly, because I think this highlights the importance of this work, is right now credit unions, the number of credit unions being established in the United States is very few and far between. And so why I mentioned that is because there aren't a ton of people that are getting into this work, and that really just showcases, I think, the complexity and the challenge that we have that's at stake here. Over the past just year alone, I think we've, based on mergers and acquisitions, credit unions have essentially diminished in numbers by the tune of 150 to 200 just in the last year. In the past 3 years, organizations in the United States have created 5 new credit unions. 3 of those chartered in the past year, 2021. And so right now, I think we're just over 5,000 credit unions in the United States. And when we charter Village Financial Credit Union, it will be one of the only credit unions, if not the only credit union, to be chartered in the next year here. So all that to say, we're, from the network standpoint, really committed to pulling together the resources that we have at our disposal. Right now, there are 97 credit unions in the state of Minnesota. And we're leaning on all of those organizations to come together. Credit unions are, as you all know, and part of the reason why it was decided to go with the credit union, are not-for-profit cooperatives. One of our tenets as cooperatives is cooperation amongst cooperatives, and we're seeing this as a way to showcase what that means from a cooperative standpoint. And so that's where we come in, the network. I'm certainly not an expert on curating credit unions. I don't know if there really is an expert about, maybe there's 1 or 2 folks that could actually legitimately say that they are an expert in creating a credit union. That said, we have experts that span the expanse of credit unions and leadership and resources. And so what we're trying to do is be that connection point for ABEP to be able to fill in any gaps that are needed, to, as Corey was mentioning, to provide expertise and resources when there is a need for folks to volunteer in those spaces. And then obviously, as I dropped in the chat here, we kind of want to put our money where our mouth is and help drive contributions to the project in the form of capital contributions to start. And then hopefully, if you haven't yet taken a look on our landing page on our website, we also have a space for individual contributions. Those are capital contributions. And then also taking in post-opening deposit pledges, which we anticipate that being a no-brainer for credit unions. And so, again, just honored to be here today. And thanks, Deborah, for giving me a compliment too.
Thank you.
All right, folks. So I'm not going to keep pushing questions here if we don't have any more. Really appreciate the conversation that was generated. So I'm going to do just one last check if this brought up any additional reflections or questions. Otherwise, we'll move on. All right, we're going to move on. I'll pull the PowerPoint back on and turn it over to Joel.
Okay, so thanks everybody for spending this hour with us. I think, I'm just going to recap what I heard, which is obviously the village has restarted, regained some momentum towards opening. The biggest change that I've learned in preparing for this session, and in today's session, I've learned even more, is how much the credit union industry is rallying around this project. So it's not going to take philanthropy alone to get it done. And in fact, it never could have been done with just philanthropy. But I think now with Deborah and Denise and Valerie and folks like, was it Ben, Mr. Herring, you know, involved, the connection to the broader credit union community is much, much stronger, and that seems like it's going to be a critical resource. But another thing that I would say has changed since 2016 is the context that Village will be born into. There is a significant amount of new investment happening in North Minneapolis, both through you know, commercial property development like Juxta's new campus, or the 927 building that Phillips and Tri Construction are building together. But there are many projects happening around the north side, which I think have the potential to really enliven the local economy. And the arrival of the Blue Line extension in the next 5-ish years will create even more construction and economic development opportunities. Those station areas in North Minneapolis will become hubs of local commercial activity. And I think in the midst of all that, we also have some really substantial new dollars coming in to help spur that work along, including the $22 million commitment that Minneapolis Foundation received from DEED to support local entrepreneurship in the West Broadway corridor and the Lake Street corridor. And that money, you know, will be matched 2-to-1 by other private money. So there's really a lot of upside potential in the north side economy right now. And that can go a couple of ways. I mean, we all hope that allows the neighborhood to become a more economically vital place for the people who currently live there, but it could also create a lot of pressure to squeeze out the people who currently live there and replace them with more affluent future Northsiders. And you know, one thing that's very important for Northside Funders Group is to push back against displacement. And I think you can't find a project that embodies that combination of building economic strength and doing so without displacing residents. There's no project that embodies that better than Village. So I can understand why funders would be frustrated that it has taken this long to get the credit union off the ground. We all hoped it would be easier. I think we were all naive, frankly, about how hard it is, even in the best of circumstances, to do this. But we still have that opportunity. And in some ways, the broader environment has become even more promising and hospitable to something like a Village Financial. So that's my kind of my context comments. I hope that folks on this call who have funded Village in the past will take the chance to meet with Deborah and her team again soon to talk about these pre-development funds that they need to raise to get over the finish line. And I hope those of you who have not funded Village in the past will seriously consider making an investment at this stage, again, to get this important financial institution over the finish line so that we can see it opening in 2023, ideally. With that, I just want to say thanks to everybody for joining. We'll share some materials from this session, condensed version of the deck and some materials that we'll get from ABEP with everybody. And let's stay in touch. Hope to see you at a future NFG meeting.
Thank you.
Thank you.
Thank you all.
Thanks, guys.
Okay, bye.
Thanks, everyone.
We're just gonna stay on for a little debrief, so
Yep.
we're not gonna end the meeting for you, for those who are still on the call. Thank you. I don't know if they're, oh.